Good afternoon or good morning, whenever you're watching this video. This is Robb from Robb Realty Atlanta, Berkshire Hathaway. I just want to talk to you briefly about mortgages, a few of the different types of mortgages we have. I want you to know that interest rates right now are sitting right around 4.5% for a conforming conventional loan. And we are seeing some rates dip even below 4.5, just depends on circumstances. No, I am not a mortgage broker, but I've been selling real estate full-time for 5 years, and I've dealt with many hundreds of buyers and lots of different scenarios and loans. So wanted to let you know that the 4.5%, even though it may seem high historically, it's very low, and it's actually at an 8-month low right now. So when it comes to getting pre-approved for different types of loans, I think many people are under the impression that you need to have 20% down in order to get a loan, and that's definitely not true. So there's two main types of loans, a conventional loan and an FHA loan. A conventional loan you can get into for a minimum of 5% down. This is not an FHA or VA or USDA. It's not insured or guaranteed by the government. So even though our two big mortgage institutions, Fannie Mae and Freddie Mac, set the guidelines for these loans, you can get into a conventional loan with a minimum of 5% down. Let me change that. We actually have some 3% down conventional loans, and I've seen 100% come across my desk once in a while, but got to look at the details on 100% because generally the lender's going to make that up somewhere. So, we definitely recommend a minimum of 5% down for a conventional loan. One thing with conventional loan, if you put less than 20% down, you're going to have private mortgage insurance. So what is private mortgage insurance? Private mortgage insurance is an insurance that the lender takes out in case you default or decide not to pay your loan. That protects the lender from your default. So until you have about 78%, or I should say 22% equity in your home, you would be able to get rid of private mortgage insurance. But until then, you'll need to pay that. And that's based on the loan amount, and you can work that out with your lender. The other main type of loan that we see is an FHA loan. And an FHA loan is a minimum of 3.5% down. This is guaranteed by the federal government, the Federal Housing Authority. So with this loan, there's also private mortgage insurance. And the big difference between FHA and a conventional is that on an FHA loan, you cannot get rid of the mortgage insurance. So you'd have to refinance into a different product in order to get rid of the private mortgage insurance. And one of the benefits with an FHA loan is that they're a little bit easier to qualify for if you're a first-time home buyer, if you have a bigger debt-to-income ratio, if you're carrying more debt. The guidelines are a little bit less stringent on an FHA loan. So a VA loan is another loan that we do, that we work with lenders with. If you are a military member, thank you for your service. If you're active or if you've been in the military in the past, you might be eligible for a VA loan with your certificate of eligibility. These are great loans for our veterans. They're 0% down loans, and they are fully backed by the power of the United States government. So if you're able to get one of these loans, that's great. There is a funding fee on a VA loan, and unless you're disabled, then they will waive that funding fee. So hope that helps describe the difference in loans. If you have any further questions, please feel free to reach out to myself or one of my team members. We'd be happy to direct you to one of our preferred lenders who can help you get qualified for these loans. It's important to be pre-qualified. Have your letters ready when you're out shopping for homes. And I want to wish everybody a great day and have a great weekend. Thank you.